Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So guys, let's take a look again on the euro currency. Well, yesterday was the holiday and today market gradually is returning back to life. So if you remember, our major concern in our weekly research was about this pullback. And we said that if market really has an intention to continue move lower, it should not show the retracement greater than the 618 retracement of that swing down. Because on the intraday charts, that action has looked like the ABCD pattern down, and the retracement that is ultimate retracement that is acceptable for respect as a respect of completing point of the ABCD pattern is 618 retracement. If market exceeds this retracement, it means that something is wrong with this ABCD. And hardly market will continue with it to the next target, to the 1618 extension. But by the picture that I now see on the intraday charts, and we will see it a bit later, very probable that market is really will start move to the downside. At least it has done everything that we need to see, and we will see what will happen. But before we continue with the technical picture, I would like to discuss with you one interesting situation, and by some reason I just have thought about the 2008 when the subprime crisis has started, and that was in fact the crisis of the mortgage crisis, the liquidity crisis that has started in the United States. And if you recall what has happened with the United States dollar, you may ask, and what chances that if there will be the default in the United States, that the US dollar will rise instead of the falling? And by my thought, the chances are really solid, because you may ask the logical question, why when the crisis has happened in the United States, why the United States dollar has risen? Well, the answer is simple. It's that United States dollar treated as the safe haven when some turmoil has happened, and that also was the liquidity crisis, the crisis for the cash, the extreme demand for the cash, and most of the cash in the world stands in the United States dollars. That's why the dollar has started to rise. Besides, many investors has needed United States dollar to invest in the US treasuries to protect yourself for the potential consequences of the crisis. So now I will ask you, what do you think if the United States government will not come to agreement concerning the debt sale, whether United States dollar will rise or it will fall? By logic, you should say surely it should fall, because the debt crisis will be in the United States. How that this dollar could rise? But I will ask you that the default is some sort of the postponing of the payment on the debt. Well, hardly they will not pay anything on the debt, because the first date when they will have to pay the debt will be on the 24th of October, and next will be only on November. They will have the time between the 17th and 24th of October first to come to agreement before the first payment day on the debt will come. Second, it doesn't mean that they will not come at agreement at all. So that will tell us that that probably could be some kind of the temporary crisis, not the permanent crisis, not the permanent default, but temporal default. And that could trigger, so since this will be some indecision situation on the market, some uncertainty, In that situation, the people could try to protect yourself again and try to again come to the United States dollar. So I can't exclude that if even the default will be announced and will come in the 17th of the October, the United States dollar could rise instead of the falling. That really could happen. And by the way, the gold also could fall, because if United States dollar growth will be greater and faster than the gold growth, than the gold demand, in general the quote of the gold will start to drift lower. Although demand will rise on gold, but the rising of the demand will be a bit softer than the demand on the United States dollar itself. And since the gold is traded in relation with the United States dollar, and demand for the dollar will be greater than on gold, and in this case the price of the gold also could start to drift lower, or at least it could just stay blank. That also is possible. So keep in mind this. The market's irrational. They are not driven by some logic. They are mostly driven by some flows and some different thoughts, just some kind of thoughts that we have just discussed. So we just have explained why the United States dollar has grown during the subprime crisis, although by the logic it should fall. But guys, I should calm you a bit, because today there was an article in the Reuters that they said that some politicians that is close to the question of the budget and question to the conversation between the Republicans and the Democrats have hinted on the possibility that they still could come to a conclusion on the budget and on the debt sale today. And that could happen today. So let's keep an eye on it. And now let's return back to the technical picture. So here, guys, you could see some sort of the head and shoulders pattern is forming. I don't have the MACD indicator here, but if you'll take a look at it, you'll see that there are some divergence present here. On the 4-hour time frame chart, you'll see even greater divergence with these tops with the MACD indicator. So maybe market still could turn to the downside. In this case, we should be focused on the potential A, B, C top. A, B, C, D move to the downside, and that again will lead us to the same area, in fact, that we have discussed previously. Okay, so that's confluence support 134.50 area, previous swing high, target of this engulfing pattern to the downside, also the monthly pivot point that has been tested here. So that's again leads us to the same area. So that's the pattern that we will keep an eye on. On the 4-hour time frame chart, what we see, market has slightly penetrated the 618 resistance area, 618 level, but returns right back now. Although trend holds bullish, but market now still stands below the resistance, and chances of downward continuation still here. Besides, if you'll take a look at this small area BCD pattern, A, B, C top, you will get this was the 100% extension. That's why particular market has shown this respect. And 1618 extension of that ABCD will stand approximately the same area as 134.50 area that we have discussed previously. But major picture that we should deal with is on the hourly time frame. Here is the picture on the hourly time frame. You can see that market has formed a butterfly reversal pattern right at the 618 resistance, and now market has turned to the downside. So that is bounce down, retracement. So in fact, if market really intends to continue move down, that it should happen right from there, because in fact the price action already has shown anything that we need to for starting move to the downside. If in these circumstances market still will exceed this high and turn to the upside, that will mean that market hardly will continue and move to the downside in the short-term perspective, because everything was done. So take a look at the daily time frame. Engulfing pattern has happened. Market has triggered 618 retracement. After that, forming the reversal pattern right at an area where it should appear. It's right here. and starting move to the downside. So reversal pattern has happened right at the top of the right shoulder on the daily time frame, potential head and shoulders pattern. So everything was done. And in such circumstance, market only has the one directions to the downside. If this will not happen and market exceeds these highs and turn to the upside, that would probably mean that market will take out these highs and continue to move higher. And that will tell us that retracement down will not come. So if you have the bearish view and bearish assessment of the current situation, you could take the short position that the stops probably above these highs. Because market should not exceed it, or everything, as I said, was done already. That is absolutely suitable point of invalidation point for the possible move to the downside. And now market already stands with the retracement back inside of this swing. So let's see what will happen on the euro currency. In the nearest term, some relief or some information should appear, because we're closer and closer to the 17th of October. Maybe even we will get something today trading session.